What is up, everyone? Welcome back to the trading world. If you guys are new to my channel, my name is Jake, and I cover the NASDAQ futures market daily, covering all kinds of trades that you could have taken from people both on Twitter and trades that I observed as well. If you guys like the type of content, definitely consider subscribing, leaving a like, following me on Twitter, and checking out my completely free Discord. The link to that is in my bio. Guys, today was actually pretty straightforward, and the reason I say that is because higher time frame, yeah, we were in a range, but we had this giant SMT. So you can see this is when NASDAQ makes a higher low and the S&P makes a lower low. So this is really nice for bias going into the day. We get this SMT, and then you can see that we have a 4-hour gap right here. And this 4-hour gap is in discount. Now, I tried to take a trade off of this yesterday, and it was a little premature, but this ended up giving us bias for today, and you can see that we expand higher off of this 4-hour fair value gap in discount. So let's mark this out here from high to low. See, this 4-hour fair value gap is in discount. We get S&T with this low, and then we expand off of it, right? So then jumping down to the lower time frame, you can see, actually first, note this is another fair value gap right here. See how the market respects this 4-hour, this lower time, or this 4-hour fair value gap. There's a second 4-hour fair value gap right here. So jumping down to the lower time frame, you can see how the market is respecting this area, right? Is respecting this gap. So we sweep out all the lows into the bottom of the fair value gap, and then we expand off of it. So on the lower time frame, we have, so once again, this is the gap. See how the market respects this gap here? On the lower time frame, we had a giant accumulation, right? All of this is where we're just chopping around, generating orders. Then, right at 9:30, actually, let me just pull up a screenshot just to show you real quick, because it's going to take too long to pull everything up. So here you can see we consolidate all morning. We get right after market open, so you can see market open is right here at 9:30. We get this instantaneous dump, sweeping out these range lows. Here, this is our manipulation for the day. And we actually get S&T at this low here, and then the trade of the day right here was this 1-minute inverse fair value gap when we close above this old 1-minute bearish fair value gap, and then we first expand to these equal highs and then continue to expand. So once again, like this was very, very nice, because look at how obviously we get S&T. So look at S&P 500 real quick right here. S&P 500 makes a higher low at the bottom of this gap. So S&P 500 makes a higher low at the bottom of this gap, right? NASDAQ makes a lower low at the bottom of this gap. So S&T is really helpful to detect manipulation, right? We can see this is a giant 4-hour gap. We get S&T at the bottom of the gap. So then we're anticipating this to be manipulation. And as well, guys, this is not just a 4-hour gap, but this is also a 15-minute gap. And the reason you like this one is because measure this move out from discount to premium. This 15-minute gap is the one that's in discount. So I'm going to mark out this 15-minute gap as well. So, boom. See how we're respecting that? So then dropping down to the lower time frame. Once again, we have accumulation, manipulation with S&T, And then, once again, this was 9:30 right here. What can we expect right after market open? A lot of the time, we can expect our fake out move. So we get this fake out move to sweep out the lows of this range with S&T. So now we're expecting distribution. So 15-minute for value gap. First of all, we get that 1-minute inverse for value gap, and then we expand up. So one way you could have taken that inverse for value gap is like this, where you could have just gone, so accumulation, manipulation, 1-minute inverse for value gap here, and then you could have just scaled out where, let's say you did 5 cons, because I risk 200 per trade. Oh, 5 micro cons, not real cons, right? So that's $200 risk. That's how much I risk on each of my prop evals or funded accounts. Once again, those are not real money, but 5 contracts of micro contracts, scale 2 out at these equal highs, 2 more out here, 1 more here. Once again, this quick pop after sweeping out this low with S&T, this is really, really high probability signature, and then you control your stop here. Yeah, just very, very nice accumulation, manipulation, distribution. Later on, we end up getting a few other nice trades. There's this one from Hydra where we come back down after taking out the high. We dump into, let's see if I find it here. We dump into, sorry, that's not it. I'll just map it out real quick for you guys. So we have this 15-minute BPR here, where you have, once again, our bias is bullish because we have that S&T and we've broken structure to the upside on the lower time frame. So now our eyes go to this 15-minute BPR. So 15-minute BPR. And once again, a BPR is when you have bearish and bullish fair value gaps that overlap with each other, right? So 15-minute BPR, and then dropping down to the lower time frame, we end up getting S&T with it's very, very subtle. It's a very, very subtle S&T, but we get S&T, oh my gosh. We get S&T with this right here. It's very, very subtle. But it's on the 32nd, it becomes a lot more obvious. S&T with this low here. So NASDAQ makes a higher low, and S&P makes a lower low. So here's the S&T. Hydra marks that out as well. And then from here, right, there's 2 different ways you can take this, right, in my opinion. I took the first one on paper, which is this 30-second inversion. So we sweep out the lows. Then 30-second IPG right here. And we have very good liquidity above. And so with all that in mind, we expand. So you could take this as an inverse for value gap, number 1. Stop loss going right there. And then all the way up to these equal highs. That's 3 to 1. But once again, I always scale out of my positions. It's never all or nothing for me. So I'll do TP1, TP2, TP3. But that's how you would take this as a 30-second inversion. And then you could have also taken this as a change state delivery. So if I'm doing a change state delivery, I want to have, ideally, ideally you want to have an aligned time frame key level. So 15-minute BPR. What is this? 1 minute change state delivery right here. So here's that change state delivery. We get a candle body close above this old up close candle here. 1 minute change state delivery. And then same thing, right? We expand off of this, and you can measure out the manipulation here, right? If you measure out the manipulation here, you can see we go right to the second standard deviation and right to the fourth standard deviation perfectly. So the market runs off of these flow state models, right? Because it's not flow state, it is literally just market making. That's what this is. So fourth standard deviation, boom, we go up to that. So I like when we get a nice close with good liquidity, I like entering these flow state trades on the close. So you can enter this on the close here, 1 minute change state delivery. And then when I enter on the close, I don't put stop loss all the way at the low because I'm not anticipating a retracement. If I'm entering on a retracement, I'll usually have stop loss at the low. Sometimes body, but most of the time always the low. But then if I'm entering on the close, I'm anticipating us to go run liquidity. That's the whole point of entering on a close. So second standard deviation right there. And once again, scale out all through here. But that's how you would take this. Now, yeah. So that was the next trade that I liked. Then we had let's see. There was this one set up for life in the morning. A lot of people liked this. Personally, I'm not a big fan of the way the price action looks at this time. It's kind of wicky, but for a lot of people, this was light bulb because we swept out the data low, and then we go up to the data high. And I mean, these really do work out a lot of the time. So a lot of people like that one. Here we have Johnny marking out that 15-minute for value gap we talked about, and then another 15-minute for value gap, and then expanding to candle range high. So he enters in these fair value gaps and then takes profit when we expand higher. I'm not exactly sure. He doesn't say exactly what his entry was, but I think he entered in these fair value gaps. Or maybe on like a 1 minute change state delivery of each of those. And then, but yeah, once again, guys, this was all just a giant AMD day. As Haney says in the Discord, this is beautiful accumulation, manipulation, distribution. Once again, I'm going to mark out this model again real quick. Accumulation, and then manipulation of the lows. And what's cool is if I measure out standard deviations, look how perfectly we backtest OTE here. So once again, when we backtest OTE and we get this candle, this red candle that closes in OTE, that's a sniper entry, right? And now I'm still getting better at these OTE, like flow state OTEs, but I've noticed it so many times where when we get that down close candle inside of OTE, I mean, it's just a beautiful sniper entry, especially because look at this. We got SMT here as well. I'm not saying we should enter those yet, but like eventually down the road, it's a possibility. So SMT, sweep of the low, and then we back this OTE. Here you can see an image of that where we backtest OTE. And look, guys, these half standard deviations, right? They can be nice for take profits. Oh, another thing I forgot to mention. Statistical mapping. If you guys don't know what that is, right? I've never talked about this. I haven't talked about this in quite a while because my subscription to it expired, and I let it expire, right? But recently I was thinking about it and I kind of want to get back because I actually do like it a lot. What it is, it tells you the statistical expected manipulation of a given range of time. So today I really liked, whoops, that's the wrong one. The statistical, check this out. So if you measure out the opening range, so from 9:30 to 10:30, right? We went right to the statistical expected manipulation level of the opening range, and then we expand to the statistical expected distribution level of the opening range. So this played out almost perfectly. So I have that marked out here where statistical opening range manipulation level, statistical opening range distribution level, and this is perfectly aligned with the second standard deviation, right? So I found all this really interesting. And as well, we manipulate below 8:30 and 9:30, and then we go expand. Yeah, a lot of interesting stuff today. Oh, there was this where we had S&T after sweeping the equal highs, break of this low, measuring this displacement from high to low. This was equilibrium. We backtest equilibrium, overlap with this 2022 gap, and then we expand lower. Here it's the same thing with a more aggressive stop loss where you put your stop loss above the fair value gap. So I thought that was cool. And let's see, what other trades do we got? Anything else on Twitter here? Here we go, Dodgy talking about how great he is. Like he's just in love with himself. I can't believe how many lives I'm changing. I mean, yeah, this was a good trade. This was objectively a good trade. So I wish I took it, but and then yeah, I think today was just very, very textbook accumulation, manipulation, distribution. Sometimes, you know, it's always easier to realize. It's easy to fumble the bag sometimes. Like, even though it's so obvious, like, you feel like you should have been able to catch it. Like, it's so obvious in the moment. If I'm not locked in enough, I'm going to miss it, right? And so, it's a process, guys. But one day at a time. And, yeah, I think I covered most everything I wanted to talk about today. But essentially, the main picture is we had two different market maker models. One off of this 15-minute gap here, and another one off of this 15-minute gap here. So in summary, here's this first model where I actually like this lower change of state delivery because once again, this is a game of liquidity. Once we get this change state delivery, we also inverse this gap. This one, yeah, we haven't closed above this, but I know we're gonna go run liquidity, so I would take this one, right? So I actually like this lower change state delivery close. So once again, 15-minute gap, back testing OTE after sweeping out the low with manipulation. We get that 1-minute change state delivery, and then take profits all through here. 15-minute gap, 1-minute change state delivery, measure this manipulation out, project out, 1 standard deviation, 2, 3, 4, and we go right to that 4th standard deviation, right? So that was that first market maker model. Second market maker model was the one off the BPR where we had accumulation, manipulation, 1 minute change state of delivery, close, scale out, 1, 2, 3, second standard deviation hit, fourth standard deviation hit. So, yeah, that's basically the main things that happened today. And then in between those two, once again, we had this little mini 2022 model, which took us lower. And something I found out that was interesting is we ended up getting SMT with this daily rejection block. So you can see S&P, that's this up here. S&P swept out the low, NASDAQ didn't, and retested this. So I like to call this the flow state phoenix because it's like on the lower time frame you can still take a 1 hour change state of delivery off the daily key level. So it's still flow state, but it's also like a phoenix model because we have SMT with the rejection block. Anytime you have SMT with rejection block, I like to call that it's a phoenix model. Yeah, I think we're pretty much good for today. Let's move on to tomorrow and keep going, guys. Yeah, I'll see you guys in the next one. Peace out.